What's up, everybody? Welcome to the stream today. Happy Friday. Glad to see everybody on Discord. I stream this also on YouTube and TradingView, my favorite. That's what I do all my charts on. Hey, what's up, Casey? How you doing there, man? So, I was off last week, but it looks like I've come back into a pullback on the market. There's a lot of things that I want to look at today. I want to look at the existing positions that I've got on. Happy Friday to you, Worley. And see if there's some opportunity out there. We may find some. Of course, as always, if you've got things that you want to look at, symbols, post them in the chat. I'll give you my opinion on them. And I also welcome people to point out symbols to me, especially our guy Casey there. He likes to post about breakouts, but I can't look at every single market out there, and that's why I have a Discord community. Don't charge for it, but it's so that people can come and bring their ideas so that I can take a look at them. There's a lot of things that I put into my notes for today's live stream that come from that, actually. Some things to look at, things like Lockheed Martin and other various implementations of the strategies I use, which are real simple technical analysis. No fancy lines or charts. It really just boils down to 50% retracements and spikes. And one of the things that I'm going to do today, I'm going to actually go through some trade shots that I have. There were some questions on my Discord about spikes. Spikes like we've got up here on the screen. Let me double check. I think we got everything going. Yeah. So spikes like I have up on the screen here that the S&P 500 did on Thursday of last week. And how I define that is basically where, let's go back a few days in time to last week. So last week on the market, S&P 500, the stock market, we had this big long bull trend that got us up to about 4,600 on futures. I use futures because I trade them to really kind of monitor the market. And the market starts to top out, does a little double top depending on what time frame that you look at it. Very clear to see. And then by Thursday of that week, let's go through one by one. All right, basically on Thursday, you had the market try to break that high, and then within the same day, intraday, same bar, it closes back inside that range. And this right here is a signal of a false breakout. And it can be a very powerful reversal signal. And that's why I have this indicator that I made, which is free, by the way. If you just send me a private message, I'll give it to you on TradingView. That just identifies when something does something like this. Very powerful reversal opportunity. Not every signal is going to be a reversal. And that's one of the things that I want to talk about as we get into the live stream. That's the topic that I'm going to put out for today, is sort of a instructional teaching experience. I go through every day that I'm trading, and up on TradingView, I go to save. Well, sometimes I copy. I'd actually do two things. I copy the image into a document as a trade log. Then I also do a download image, and that sends it straight to your download folder. And then I basically just collect them. It's not going to take much hard drive space, and lets me then go back and see these examples so I can remind myself of them and also share them with you all as a teaching opportunity. So yeah, thanks. I'll get to it in just a second. GIG, or you want me to call you Gig. And so yeah. Put your symbols that you want to look at. I know Apple is going to be something to talk about. Apple is definitely. We'll look at it. We'll look at it. But yeah, if you got symbols to look at it, post in the chat. We'll get to it. I'm going to start off with a market update. Just kind of go through my watch list and see where things stand. But then yeah, as we get into your symbols that you want to look at. I'm going to take this opportunity to teach a little bit about what is a good spike or what is a good breakout, as well as what is a good 50% retracement, because that's probably going to be more useful to people that are long-term investors, is the 50% level, especially on longer term holds. And I'm going to explain what that means. Basically, when a stock or a crypto, for that matter, pulls back to a major 50% retracement from a big trend that it has had, that is where you want to look at price to reverse. It's a good pullback opportunity. There's been a ton of opportunities this year, as there is every year. I mean, Tesla has had a very, very good one back in March. That's one of my favorites of the year. Amazon, which is massively up on earnings, that is the product of another earlier year. So let's just kind of dig into some of these that I'm talking about here from my watch list as I do my market updates. So Amazon, and this is, going back to the 50%, Amazon had earnings. I believe was it today? Yeah, it was today. And I have been watching Amazon very closely because this was basically one of many trades of the year for me. I have a lot of trades in the year, some big stuff. I mean, one of the things I said was going to be a big trade is TLT. Yeah, that's not panning out, but Amazon is. And Amazon is going from what is a multi-decade 50% retracement level. Let's just start over here. So let's look at a quarterly of Amazon, okay? We'll do a monthly, hold on. So go back to the end of 2021. Do you remember that time? Do you remember back in 2021 where everything was super hunky-dory? The stock market had made a new high every single month. Most bullish year. I'm going to say it's the most bullish year of history, and there may be a higher percentage, but the fact that it made a new high every month, the stock market, that really was unprecedented. I did the research and proved it to myself. Yeah, people remember. And so Amazon, which everyone uses, there's really no competitor out there. It's not like Walmart has really been able to catch up on online retailing. But Amazon is Amazon. It's literally a tautology, basically. And it came up to its all-time high. Now, this is all split adjusted, but the low, let's be very specific here. So the low, it's been split, so it's kind of hard to say, but the low from 2001, which, by the way, even something as Amazon, a little history lesson here, that right there from the dot-com bubble was a 95% drawdown. 95%. Somebody that bought the high in 1999 of Amazon, they took a 95% drawdown. But still, years later, it doesn't really matter where you bought it, does it? And so you can take two lessons out of that. Number one, anything that is the best thing ever can drop over 90%. And also, if you hold it long enough and it just happens to be the thing, then you will be okay. But as long as it's Amazon. But I mean, it's a bookstore, an online bookstore. Who would have thought that would have taken over the world? So going back to that low in 2001, all the way up to 2 decades later, 2021, it set up a trend for which I was watching as we came into this big bear market of 2022, which shouldn't have surprised anyone. I wouldn't say I was surprised, but I definitely didn't know that 2022 was going to be bearish. I thought it would be a small pullback. I didn't realize it would be a big one market-wide. I tried to pick up a little bit of Amazon in the 140 range. Didn't work out. But then when it pulled back this year, or really at the end of 2022 to 94.96, let's call it 94.50, that is a two-decade 50% retracement level. Kind of danced around a little bit, but that's the level that you want to look for. And so if you're just doing a simple buy with a good risk reward, let's just say you're playing it back up to the high, let yourself stop out somewhere around 60 because that would enter the valley of risk, a little death valley right there. So you don't really want a stock to go that below the level. But as long as it holds, it's fine. And so from that level, as this bull market has gone on, yes, we are in a bull market now. Finally, people are kind of acknowledging it as we get into the year. Amazon is just coming off of that 50% level. It's just that simple. Now, a lot of people like to use different Fibonacci's, but I really think you only need to use 50% to keep things simple. And so Amazon has been a great, great opportunity this year. I know I'm talking about it after the fact, but if you want to take the time and go back through every live stream I've done, you'll see that back in the spring of this year, all of these opportunities that I've got on my watch list right here are things that I picked up when everyone was still thinking that we were in a bear market. But you got to be a little contrarian. But Amazon earnings came out and, well, pops up. Now, I was watching Amazon at this particular level because it was the 50% of the down move. In other words, the bear trend from 2021 down to the low in December, that also set up a bearish 50% level. And if you look at the price action from the last few weeks, it was in fact holding that level. It came up to that level of 134.77, held it, and it was right there at earnings. Didn't add anything at earnings because that would be a very dangerous situation. But now you have a definite break of the level. I will be looking actually for price to pull back, to test this level again, and hold that thought because we're going to talk about it in relation to Tesla here in a second. But oftentimes price will come back to a major level, especially one that it has tested before. It was resistance, pops above it, comes back down, holds as support. That's what you want to see, and then launches off that level. Got a few examples of that in my trade logs I'm going to show you in our little teaching segment later on. But at this point, what you need to be doing if you're looking for opportunities in this bull market, because you really want to grab pullbacks. You want to try to grab some pullbacks when the market is trending. Any little pullback you see, do you guys remember BTFD? Buy the freaking dip. Haven't heard that in over a year because, well, people were getting killed with that mantra, but that was the mantra of 2020, 2021. Well, actually, it predates that. It goes back to 2017, 18. But BTFD is, for lack of a better mantra, the way that you really want to play bull markets. And so that provides a little segue now into Tesla. Now, Tesla was, again, a really good example of 50% retracements. Let me tell you what I'm talking about. So from the high before of September 2022, right before we had this big annoying down move, annoying to people that were hodling Tesla, you have a nice little trend, okay, nice little bearish trend that took us into January of this year. And so we had almost a 100% rise in January, just dead cat bounce, bear market bounce, what people thought it was. Also a little bit of AI buzz. Brought it back up to the 210 level, which is the 50% of the down move up. I took a short, didn't make as much as I wanted off the short, but it was still a good level. And then I was watching, I've really been watching this opportunity for 2 years almost. I bought a little bit of Tesla back before it made this big run actually it was right here in August of 2020. Actually, that I believe was a 50% retracement as well. So August of 2020 was another example of where you had this little run from June of 2020 up to July of 2020. And it pulls back to that 50% retracement level, which held it twice. What was really cool about this was this guy right here. It made a spike, a false breakout right at that 50% level, which, little history lesson here. So I bought it it was a Tuesday. I went hiking that day. Actually, I was out in the woods and I checked it right before the close. and I saw how it was right testing that level. I'm down on this position. Really, yeah, had to grit my teeth and just stick with the strategy. And then the day right after, or that evening, they announced that they were going to do a stock split. Didn't know that was going to happen, but it happened at a technical level with a false breakout. And that's why I don't wait for news to happen. I look for setups like this and then put myself in a situation to win based on it. That's what technical analysis really is. It's putting you in a situation to benefit from the news. Everybody focuses on the news, like, oh, this happened, thus this is going to happen. There's no way to trade off of that. Anyway, but that's another example of a 50% retracement years ago, why it's super valuable to watch for it. Now let's go back to the present. And so that same 50% retracement strategy was, since that buy, I haven't bought any more Tesla. I mean, I basically just sat here and let it go up and get crazy and all that kind of stuff. I wanted to have a big, major pullback, that made everyone start talking about how Tesla was going bankrupt again. And that was basically 2022. And so as we get into 2023, we have this big run up. I'm like, okay, rise off of a major low. Let's start looking. And so the 160 level was the 50% pullback to the 2023 trend. Pulls back to here, 160, buy, go. And so there were a lot of really, really excellent examples in this price action right here, by the way. I believe if you go down to the 5-minute, or maybe it was the 15. Right, so there was a spike breakout. I'm not going to dig into that today because that's a sort of a layering of strategy. You want to keep things simple. But basically when price came out of the cloud on the 15-minute, after it hit this level of 160, it really never came back too far, never came back to break the low, and up it went. A lot of good strategies. I've got them posted, by the way, on my Discord. I just had to kind of dig them up. They're also on TradingView too. So go back and look for Tesla symbol on my ideas, and I posted a lot of these back then. So now we're in modern times, and I keep getting asked the question, when should I buy Tesla? And I actually made specific posts on Discord pinging people like, hey, you've been asking me about when to buy Tesla. Now's the time, back at 160. Well, now that it's risen, I go and I check my notifications today, and they're asking me like, hey, when should I buy some Tesla? I'm like, well, the short answer is now is okay. It's not great. Great was back at 160, but one of the things that I do trust is not only when price comes up to a 50% level, I want to see it roll over and use that as resistance, but I also want to watch and see if it breaks. Remember, we were talking just a moment ago about Amazon and how Amazon came up to this level, respected it, a little bit of respect for it there, came up, rounded it as a resistance, and then now I want to see it kind of potentially pull back and hold. Well, that's exactly what Tesla is doing right now. Came up to this 50% level, broke above it, and now we're going to see if this holds as support, because this is the 50% of the entire leg down from the all-time high down to this low. It really needs to hold here at this 260. Hold is, of course, a nebulous term. We're not going to get it to the penny, but we really just need to see next week if we can get a week to close above it. It's kind of flirting right now, closing above it, closing below it. Where I don't want to see it is I don't want to see it break this low right here. In other words, if we do start getting a pullback below 240, then that is not what I consider buying opportunity until we would pull back all the way to, I would say, 200. So no, 240 is, I do not think that 240 is a good level to buy Tesla. That is actually a break of the last level of support of the top end of this trend. I think that if you're going to take a stab, if you're late to the bull trend in 2023 of Tesla, which you are objectively at this point, then you got to take a stab now with the knowledge that you're basically going to try to play a volatile rise over the next few years up to the high. That's what you're basically trying to do at this level. If it does not hold, if it breaks, like if it hits like 238, 237, then you probably need to stop out and then wait until it potentially comes back to the 200 level where there's a lot more, price action to kind of go off of. But I think this is really the last reasonable stab you can take. Hashtag not financial advice, but this is the last reasonable stab based on technical analysis that you can take before you really get into a segment up in here where there's no good risk reward. Because anywhere you buy it at this point, you're basically playing it for the high. And yeah, if Elon, continues being Elon and, makes Teslas fly, then maybe, we're going to get a break of that high in the next few years. Who knows if Tesla could do it this year? I don't know. But at the same time, if you are buying it in this area, the 300 plus area, then your risk is still coming all the way back down. And so, if you bought it at 300, the high there, there's not an unreasonable chance that you could lose 50% of your initial investment. That's just the way it goes, and you don't want to lose 50% on anything. It doesn't matter if it's Tesla. It doesn't matter if you're holding it for 10 years or whatnot. You want to try to grab it when it's reasonable. And so it's still inferior to try to pick it up here, because what you end up doing with a buy at this level, if you think about it from a risk-reward standpoint, it could come really it could come all the way back down to this low here, okay? And so what you're doing at a trade at this level is a one-to-one risk-reward. Sucks, but you stand to either make 60% to the upside, lose 60% to the downside, hopefully. And so this makes it a one-to-one. But as you wait and it goes up, now you're getting into, these are not things that you want to take. You really got to wait and try to get an opportunity. Now, if you're a long-term holder, you want to put in an IRA, et cetera, just do what you want to do. But from a trading perspective, it really just comes down to that. It really just comes down to the risk reward. And so this is the last opportunity to have a decent risk reward on Tesla that's backed up by some sort of technical analysis. So another good example, let's talk about positive stuff. Been talking about it every week. This is just one of the kind of things that I bought and I don't really worry about. MetLife earlier this year. It rhymes for me because it's a 50% at $50. This is back in May of this year. Pulled back to the 50% level of the trend from the COVID low to the all-time high, which is still there's still probably out there some stocks. I don't know them off the top of my head. Most of them have already pulled back through 2022, but have pulled back from their COVID low, which is a low for pretty much every stock, and all-time high, which was probably in 2021. So this big trend you're going to see on a weekly time frame for your long-term investments, your stocks and things like that. That level has been key for last year and this year for stocks to pull back and try to hold. This is one of those opportunities that's only going to happen once a decade for some of these stocks, because the 2020 low was so monumental, and then the bull run of 2021 was so up there, that this pullback that we've seen from 2022 and 2023, where everyone was scared to buy because recession, where's this recession we were supposed to get? I ask it. Somebody want to tell me where's this recession everyone was talking about? Exactly. Financial media is built upon sharing stories. If it bleeds, it leads. If it scares, it tears. I'll come up with a better one for it. But everyone's been so afraid of losing money when the market was going down that they've missed out on all these opportunities. And I don't think there's that many left. Like these patterns have happened over the last 18 months when the market was going down in individual stocks or broadly. And you're kind of running out of these opportunities. And so if we break the high, if we get up to the all-time high of the stock market this year or next year, now people are going to have to start doing those inferior risk reward trades. And I'm afraid to say that a lot of, probably we're not going to see very many more of these kind of opportunities where you have a weekly low and a weekly high pulling back to a clear level. I mean, these opportunities are going to go away. They're already hit and they're coming up to their highs, and now you've got to make some really hard choices. You got to be there with the rest of the plebs, trying to chase. But MetLife is just a great example of something getting to a 50% of a major level. It's really the last good weekly 50% that I've seen this year, and comes up. Caterpillar was another one from earlier in this year. This was on a daily, so this was from the low back in September of 2022 up to its all-time high. It gave me a little bit of grief. It didn't go immediately. In fact, I think I bought it in March of this year when we had all that banking FUD and the market went down, and had a better little spike opportunity. This is actually a good teaching lesson. We need to come back to this in my teaching segment. But yeah, it danced around this level, never stopped out. And now Caterpillar, everyone's talking about. I had great earnings, woohoo, whoop-de-doo. But it's not like you really could have smartly bought it here at the high. You needed to be in when it was hard. It is easy to buy something that's going up. It feels good. But the money is made in this nasty period right here, where you have to buy something like I did in March and sit here knowing that you're going to have to cut the loss at 200, and you're going to sit here and dance around for 3 months, sit there and watch the little item in your portfolio go from negative to positive, negative to positive. That's the work in trading. That is the work in trading and investing, for that matter. The work is not out there lifting, heavy objects, like construction material. The work is sitting there and dealing with the heavy emotions. And so you could have potentially made some money if you were lucky, but it wouldn't have been smart to buy something at the high. But now that you broke the high, again, we'll see what this thing does. But this is another example of a pure 50% pullback play. Doesn't happen all the time, but it's good when it does. Let's see, what else? Need to talk about, let me just talk about crypto now, because I know a lot of people they come here for crypto. And we're going to get to your symbols here in just a second. But Bitcoin itself, it has hit not the big 50% from the all-time high down to the low in November, but it hit its March of 2022 high to the low of November. And a few weeks ago, I posted about this, how this is a short opportunity, or at least an opportunity where you might want to sell and or stop doing DCA, which is kind of controversial among some of my friends. But that 50% level at 31, let's call it 800, it hit that level, and it has definitely been respecting it. Where is it going from here? I mean, I'm waiting to see. I mean, do I think it's going to come back and test the low? Maybe. I think to have a good risk reward, you need to. But for right now, that is what's going on. Let me pull up some of my notes here, because there's some things I wanted to talk about in the Bitcoin space. So, everyone's always trying to come up with fundamental justifications for their Bitcoin investments. And throughout 2020, 2021, and 2022, I always heard about on-chain analysis. And I never, ever, ever, ever heard an on-chain analysis that was bearish. That alone made me completely discount it. But I just knew. I felt and I knew, because I'm a technical trader, when someone was making a mistake. Okay? I'm not saying that I knew how to tell people. Well, I mean, I did. I called the top when there was a false breakout of Bitcoin. But no matter what happened, no matter what kind of analysis that people were, using, the fact that Bitcoin back in the fall of 21, when it failed twice to really get that momentum up, that was a sign that things were going to go down. You needed people to keep buying it for it to go up. And I tried to raise the alarm to people, especially when we had that December jobs report, which made Bitcoin tank. Why would Bitcoin care about the U.S. jobs report? Because it was inflation sensitive, or excuse me, interest rate sensitive, which was going to be what the Fed did based on inflation. And throughout this entire leg down, people were talking about, well, on-chain analysis says that things are going to turn back up now. Hopium. Breathing in that hopium, trying to find confirmation bias that things would be okay, but they weren't. But we'll look at it anyway. So on-chain volume has decreased by 17% on Bitcoin, and even more so on Ethereum. And you can tell this just by looking at the daily bars. I mean, there's just not that much trading going on. There's just not. So let's see, what else was significant in here? A lot of, NFT marketplace volume has decreased. Nobody wants to buy monkey pictures. Just the TLDR of this entire thread is there is less and less activity of Bitcoin trading. Now, that doesn't necessarily mean bearish, but it does in the context of what I've kind of realized, is that cryptocurrency doesn't solve any use cases. There's a lot of ideas, there's a lot of cool ideas out there, but none of them are actually making businesses more efficient. And so the only thing that drives cryptocurrency prices is investment of capital. And with the risk-free rate getting up to about 5%, there's just seemingly better opportunities out there. There's a lot of people still trying to keep the dream alive. And I don't want to jump on the whole bear train here, but you got to be smart in that, there's a lot of good investing opportunities out there. And if you're shooting for the one just because in the past it's given 1,000% rewards, you really got to question yourself. You got to say, like, well, what conditions would make such a thing happen? The entire history of cryptocurrency has existed in a essentially 0% interest rate world. Does cryptocurrency need low interest rates? Does it need free, like cheap money to lift its valuations? The question is rhetorical, but I think the answer is unfortunately yes, because cryptocurrency doesn't generate wealth in itself. It doesn't help make a business more efficient. Bitcoin is a solution to rampant inflation, but the CPI numbers, if you believe them, are back down around 3%, getting close to where the Fed wants them to be. Bitcoin has scarcity. I still believe that it is an asset. It is an asset. It is. Is it going to replace the dollar? No. Shut up. Shut up, Maxis. But you got to be real about what they are as an investment. If you go back to the .com boom and bust, and then Amazon as it is now, there were a few winners. But knowing what they were ahead of time was very difficult. It's been a whole repeat in history. Not a complete repeat, but a rhyming of history. But if you want to buy Bitcoin, I've had a lot of friends that, not going to name names or give people away, but one person sent me a message on Discord, and he told me, I finally did it. And he showed me a transaction of him buying Bitcoin at 31,000. And I said, I really wish you would consult with me first. Because when my friends come to me and ask me, hey, should I do this? Should I do that? I'm going to take on a massive fiduciary responsibility to try to give them the most subjective opinion. Even if it's against like a position that I'm in, I really want to give them an objective because sometimes people really freaking need it. I like it when people give me objective opinions because especially in trading and investing, we get wrapped up in our own mindset, our own heads about, oh, this thing's great. I'm absolutely certain, absolutely confident. I'm going to bet everything on it. I have another friend that had a large cash infusion from a real estate transaction, and he put, all the profits that he made into Bitcoin, and to the tune, he said like, yeah, I turned that house into 15 Bitcoin. And again, I had I actually didn't have the heart to question him on that because he is very, very big into Bitcoin, like big with a capital Bitcoin B, as in a believer, like religious. And so I know nothing I tell him is going to change his mind. And people like that in my life are either going to be legends or I really care about them, and I wish that they would have put at least half that into a low index low cost index mutual fund or ETF. Nobody does mutual funds anymore. I'm thinking like a boomer. Low cost index fund. But why do that when you only get 7% a year, right? On average. You can get that in a fucking iBond. All right. Let me catch up on some of the symbols people want me to look at, and then we'll start talking about some spikes. All right. So going back up, Apple. Oh yeah, we got to talk about Apple. Apple, for many years. What is the percentage of Apple that they make up in the S&P 500? Apple weight in S&P 500. The company's weighting in the S&P 500 has, this is July, has swelled to 7.6%. So, 7.6% doesn't sound like a lot, but remember, it's 500 stocks. So it is very, very significant compared to other stocks in the S&P 500. And so you can blame a lot of these last few days of market sell-offs, especially today, on Apple alone, on their earnings. So, if people are all that surprised when you have a chart like this, you have from 2023, like January, where you basically have a big bullish trend with no major pullbacks. The biggest pullback you had was in March. Remember when the whole financial system was going to collapse? Eye roll. An 8% pullback on an individual stock. That's the biggest one you've had this year. And I don't think you can be that surprised when something like this happens. This is when you don't buy calls into earnings. So this is going to be an example of something that we're gonna say like, okay, well, now we're in a pullback. Now we're gonna set our alert at 160. That's what we're gonna do, and we're frankly not going to be interested in it until it pulls back to 160, and then we're gonna hear different opinions from people. People are gonna say, oh, that's too far for it to pull back. Oh, really? How much Apple do you have? Are you really saying it can't do that, or you don't want it to do that? In terms of potentially holding here, an argument can be made for it pulling back to its all-time high. This could be it pulling back and holding. So what you want to do over the next few weeks, like next 2 weeks, is you want to sit here at 182.94. You want to have this level marked on your chart because that's the past all-time high. And you want to see if you get some sort of a bullish setup, like a spike down and then rise back up, Or if we sit here and we look on Ichimoku, we basically try to see if we can get price back above the cloud again, maybe, and then try to get it up to there. If one of those two things don't happen, and it doesn't, and like let's say next week, it closes to hold below this level, I think probably next week, with the bearish week we've had, we're going to get a little bit bullish action, and that's really going to tell us what's going to happen in the market as a whole. But basically, wait and see. But if on the daily chart, if Apple starts getting down into the 170s, well, then that's when you're going to look for that 160 pullback. So there's a chance. What you're saying is there's a chance of it holding the past all-time high as a support and then potentially coming back up. There is that chance. But me, I want to see if we can get some people who get washed out. I think that that's really where the real opportunity comes, is when people are getting really washed out that think that this is just a pullback. So let's see. Let's wait and see. Let's wait and see on Apple. All right. No, we're not in a bear market. We're still in a bull market, and we're looking for really good opportunities. You put some money into a money market account? Well, be really like, the best time to buy is, well, it's when there's blood in the streets, as Warren Buffett says. But the best time to buy was earlier in the year, in March, when, like I said, everyone was screaming that the world was on fire, that the U.S. economy and all banks were going to collapse. Where's K? Is it KPE or KRE? Yeah, regional banking. Yeah, this. Do you remember that? You remember back in March and on into May, where regional banks were going the way of the dinosaur? Is TFC in a place to increase position size? No, because it really hasn't changed that much. If you want to, but it's not really giving me any kind of opportunity. I really want to see it come back and really conquer this move. Like, what I would like to see TFC do is come back up to 38 and hold it, and then see if that sets up for a pullback, kind of like what Tesla's doing right now at the 260 level. So let's wait. Let's be patient. It's a bank. These are old people, right? I went to a bank shareholders meeting, and at 41 years old, I was the youngest person there. So old people don't move very quick. So let's hang on to that. Let's wait. Daily chart again. Old people. We got to zoom out to a weekly. They don't think in terms of days. They don't have many left, but they still move very slowly. That's what's always kind of transfixing to me about, every time I drive to Florida, I'm always thinking to myself, like, wow, it's sunny, it's warm, it's beautiful. I could really live in Florida. And then a few minutes later, I get behind a Florida driver, and Florida sucks because of old people. And just like them, I'll be old one day too, and that's fine. But right now, I got things to do and places to be. All right, let's see what other things. A hood. I don't want to. Dead stock. Moving on. Hold on. Oh, hood. If you're going to do something, this is messy. I don't like it. I don't like this 50% because, like, you don't have any clear levels in the past to match up with it. But, do they have earnings? Okay, let's see if earnings can bring it down to 1072. But other than that, gross. All right, let's see. Let's go back up. So, SPCE, Virgin Galactic, eh? Okay, let's see. Dead stock. It's dead, Jim. He's dead, Jim. I don't see anything here. This is just typical dead stock behavior, where you get your pumps, but the pumps never actually make a new high. I mean, this is what happens for pretty much everything. Hell, let me go look at some crypto stuff. Uh, oh man, see, it's like yeah. I mean, even in something like Shiba, I saw that trending on Twitter today for some reason. Um, I mean, you just see this in everything. You know, you get a little pump when something's in dead territory. It pumps, but it never gets higher. You know, pumps gets everyone excited. Maybe we're gonna get maybe we're all gonna be okay. No, you're not. Pumps doesn't go anywhere. You know, sand. It's just it's unfortunate, but it just is the way that stocks die. Is you're going to see the bleed, and you're going to get these pumps up where everyone gets excited, and essentially you can sit here waiting and punishing yourself for, in the case of those things, and in case of Virgin Galactic, years if you want to, or you take the next pump as an example to get out. But the psychological issue there is that no one takes that as an actual opportunity to get out. I really need a forward light, don't I? I need a. I thought this setup was going to be temporary, but I've been living here for 2 months. My new place is almost done. One of the reasons I've been gone the last couple of weeks is I've got a nice new place. It's going to be awesome. I'm going to put my office in. Going to make a really nice setup. It's going to be really pretty. I'll show you guys. So, I mean, like I said, that's my opinion. Maybe they'll launch a surprise rocket to the moon, and who knows? But these are just bag holds, and this is the way they behave. It's unfortunate. It's unfortunate. That's why I really spend the majority of my time talking about stuff that is worth talking about. It's not to knock your favorite. Actually, yeah, it is. I'm not going to split hairs. But things like Home Depot, which is another 50% hold. Earlier in the podcast, MetLife, Caterpillar, TFC, which is still down. If you haven't bought TFC yet, I highly recommend it. It's a bank stock. Tesla. I mean, these are all actual freaking companies. They're safe, and so they're not as exciting. They're not gonna take $500 and turn it into $1 million within a month or overnight or a year. They're just not. But they're also not going to lose you money. Well, they're just companies that exist. People go in and spend money there. Thus, they generate revenue. Thus, you're participating in the active business that is this company. And they're just better. If you want to play around in all these little things, go ahead. But focus on the good stuff. The good stuff. Oh, I need to talk about cruise lines. NCLH is one that picked up, several months ago back in March, and it has done very well this year. I've been taking profit as it has been going up to these different levels, and now we had earnings that popped it back down to 18. So people came into Discord asking me, okay, what are we doing now? Well, I've been posting every time I took some profit on it, and so now I'm down to a runner position, and I'm okay holding on to it. I am, because I really want to see this thing eventually, and it could take a few years, to get back up to, this major 50% level that it came up to in 2021. This watermark, as it were. And you had a big old panic drop of, COVID, came back up, held the 50% as resistance. And so really that's where I want to see it get to. And if you look at this weekly chart in context, this big red scary bar right here is not that scary. That's something that this can do. So I really want to see it hold these last levels, these highs from the down move, or the triangle people like to draw, the wedge. So we want to see it hold those highs. Some people may want to see it come down to here, but if we start actually making a run down in here, I'm probably going to start lighting up a little bit and saying like, okay, well, that was a good run. So an RCL, I know that my good buddy likes RCL. Hey, look at that. Still the better choice. F me, right? So I picked the Norwegian cruise lines because I saw a setup. I think it was probably a 30-minute spike on that day. And objectively, Royal Caribbean has been a better stock to own. So, oh well. Oh well. Royal Caribbean, definitely the better one. It's just been going up. Fantastic, fantastic. All right, let me hit some of the things that Casey put in. CEG, Constellation Energy. That's a nice breakout. That's a good solid. That's a solid breakout right there. 97.89. Solid breakout. I really, really like this too. Oh man, that right there is a beautiful 50% hold too. Casey likes his breakouts. I like my pullbacks. And this right here, see how you've got it's a 50% level that hit in March of this year. Man, that's a beautiful one right there. Look at that. It's a beautiful one because what you had was not only when it pulled back to this 50% level of 75, but you also had this little spike shown by the indicator here. And this is a good one. I had a question. Let's just use this as a teaching opportunity. So this is why I love to do this. I love to have my Discord because people share ideas and I can, hopefully there are opportunities I can take, but also they're good teachable moments. So one of the problems someone had was they took a spike. Let me see if I can find it on Discord. I have on Discord. I have a channel for spikes or spike breakouts and spike retracements. Let's see. Okay, so this looks like this was in 3M, and it's on the 30-minute. Okay, all right, good teachable opportunity here. Is it 3M? Yeah, 30-minute spikes are up. Okay, so he took. I don't know if he took this as a bullish spike, but there is a difference between this spike being shown by the indicator and this spike. There's two major differences. Number one, if you notice, there are multiple crosses here. There's a cross here, and there's a cross here. And then there's a cross here. Now, this is green, bullish. The idea is that this is a bullish spike. In other words, it comes down, slams down, comes back up. People got stopped out on the bottom side, and now we're back up there. So this is a bullish spike. So really the first cross is the bottom cross is the stop. So that's about 110. So we make our stop right there using a little trading view indicator. Pullback is going to be the red line. Very simple. And then the first cross is a 2-to-1 risk-reward ratio. The second cross is a 3-to-1 risk-reward ratio, what I prefer. Now, the problem with this spike from a risk-reward standpoint is the 3-to-1 is above the last high. I don't like that. I want there to be plenty of room to get my 3-to-1 risk-reward ratio before it comes up to that natural resistance of the last high, or if this is a bearish trade, the low. So I don't like it for that reason. The other reason is if you look, did this spike actually break? It broke these lows, but did it break the major low? No. In fact, it came down to really test this low. Didn't really break it. So it's not really stopping anybody out that had their stops below this low right here, did it? No. So we're not really seeing a washout, so to speak. And finally, actually, there's three things I don't like about this. it's not at a 50% level. It's way above it, way above it. Whereas on Constellation Energy, we have the things that I want to see. So the long position, in other words, that red line is right there. Our stop cross is there. And so if our high we're playing is all the way up here, well, that's a 4-to-1 risk reward ratio. We've definitely got what we need out of this if we're playing this whole pullback to go back up. Good. Also, the low that it broke is here, where most people may have just jumped in on the 50% without waiting for the spike. And so this, boom, came down, washed people out, shot back up. So we've got that actual break, that actual washout of the major 50% level. Or excuse me, the major recent low. And finally, of course, it's happening at a 50%. Good stuff. Excellent textbook example. I don't even need to pull up my notes. This is what I wanted to talk about. So thank you, Casey. I know that you're playing the game you want to play, which is a breakout, but this was a great example of something that you want to look for. The example that I'm in right now that's based upon that is Home Depot, where on earnings in May, it's at a major 50% level, a weekly 50%, a little messy, but it's still at this 50% of 280. What was it? Is it daily? Yeah. And so when price came down on earnings right here, boom, and then closed back above it, you have what I like to see, which is the break of that low before, and also to get back up to the 50% level that we're looking at, we've got plenty of room. There's our 3-to-1, there's our highs, and it's actually already come back up there. We've actually already gotten 3-to-1 off of this trade, and so that's why you want to look for those things. All right, let's go through the rest of Casey's examples. If you got something else to look at, put it in the chat, because I'm done, but I'm going to finish things out for you guys. All right, RR, daily chart, long entry 207. Wait a minute, RR. Rolls Royce, eh? Nice breakout on earnings. Okay. Let me see, from a weekly standpoint, I might caution you on this one, Casey, because you're buying it right at a level where I'd probably want to short. I would be careful on this one because you've got this big down move from the high in August of 18 down to the low of October 2020, and you're right smack dab at it at the close. That's just my take on that. So let's see, one more. JKTYRE. Brand new high. This is okay. This seems to be more in line with what you typically go with Casey, where it's just making a new all-time high. But on the Rolls Royce, you're kind of entering into my little pet peeve territory where I want to look for 50% retracements, and that's just a really good short level right there. Going back to Norwegian Cruise Line, when you had the big drop for COVID, and there's your 50% of that level, it held it as resistance. See, that's the kind of thing that I'm looking for, not only to go up on a 50% pullback, but on something like this, I mean, this is where I'm going to look for it to potentially go down. So might not be the breakout that you that you want to go for. So just my opinion, not financial advice. All right, let's see, EFX from Turk. Is that Equifax? You got a $sign before. Does that make a difference in TradingView? No, it's probably Equifax. Equifax. Um, from the high of December 2022 to here, I don't really see. I mean, it's not really. It didn't really. It should have held 223. It should have held 223. It should have held there. It shouldn't be doing this. Shouldn't, but it is. So at this point now, you need to. It's kind of. It needs to hold 193. It definitely needs to hold 193. Otherwise, this thing is going to make a run for the low. So needs to hold 193. All right. Let me pull up my trade shots here, because I did promise that I was going to go through and look at some spike examples. So I'm going to do that to close this out, because I think these are important. And I also think, again, to do this in TradingView, go up to here and download image. And that's going to actually let me go back to his. You know, this is a great example of where what I'll typically do is I will make a little sequence. You know, here's our 50%. And then what you can do is you can go download image. And you can play it. And then see where it comes about. And then you'll end up with, you know, a collection of screenshots that you can use for going through and teaching. This is one that I actually took back in October of last year. This is the S&P 500 futures on the 2-hour, and this spike you see right here at the end with an ATR clearance of 319. That was that October low. And so we can go back on S&P 500 and we can actually see that. It's also a daily spike here. I mean, this was where the market turned. It's on the October CPI. But again, it was a classic example of a washout, a false breakout to the downside, where people sold it off and then bought it back up inside that range. And from that point in history, as it has now gone down, that was the low of 2022. That spike, that false breakout, it's very, very simple. It's very, very simple. Very, very simple. Where price breaks a major level, and then within the same bar, or if you'll notice, I have two different colors, two different shadings. Green would be a primary spike. In other words, it happens in one bar. And then the reason you'll see purple, because I already used green, was because the second bar. So one bar. This is bar one. Oh man, it's doing it crazy. 1 second. One. That is our primary spike. And then we have two. One and two. So that's a secondary spike, and I have that in purple. But the key thing here is break the low, pull back up, and then to trigger the indicator to actually fire and do the shading, it needs to close back inside that red line. But essentially, that was the bottom of the market. October CPI report. It's when I think it actually turned over. That's when CPI was, I think, at 13.75 or something. I don't remember the exact number. And then it came back down to 13.25. So the first sign that inflation was actually getting under control was back in October. And, well, the rest is history. But that's a great example of a spike. And so that was one that I had from back then. This is an example right here of another false breakout, a spike where you have highs here where it comes up, and this is a 1 minute, and you have to take, if you're trading on the 1 minute on TradingView, you got to take these screenshots in real time, because after 2 weeks you can't get 1 minute charts again. It sucks, but that's a lot of data for them to store on their end, so you have to keep your own. And so when you're doing day trading, you want to make sure that you save your 1 minutes as detailed as you want because you can't get them back again. And so here's a great example of where on 9:30 at the open, these are I used this year has been, well, these last few months for day trading futures have not been nearly as fun and easy as they have been, throughout 2022 and 2021. Just the volatility has kind of dried up a little bit. But if you see a spike on the open, watch it very closely. That's a good example of that where on the open you have this pre-market range, price comes up and closes back inside it. There's your good short. But you got to take profit because, yeah, it comes back up. And so in this case, I took notes where I had 2 contracts where I took one here, took profit here, and then left a runner, hoping that it would continue going down, but it did not. Still made money, didn't make it as good as I wanted to. Here's another example of a 1 minute where it took a while, but it finally triggered that spike. This is a 1045, so that's not exactly the open, but yeah, little spike up there, finally comes back up and hits it. Another 1 minute, how all live stream long we've been talking about 50% retracements on daily and weekly patterns. Well, it works on the 1 minute too. Nice little 50% from 8 a.m. The pre-market comes up basically 8 a.m. to 8:50, something like 8:50 a.m. before the market opening, digga, and pulls down and holds that 50% to retest the high. Beautiful pattern there. Again, you got to save these things in real time, guys, because it makes a really good archive for you and your trading to see these patterns, over and over again. See what a good setup looks like so that you can trust yourself to take it in the moment when you see it, when something like this. So always make sure that you keep these screenshots. Here's another 50% right here. Boom, back down to the low. This one was Home Depot. I wanted to bring this up as an example. So Home Depot, this was a 2-hour. Let me bring up Home Depot because this is one, because it's on a 2-hour, we can pull this up. So yeah, let's see, 2-hour time frame. I'll make my notes again. So this was a really good example of a short. So Home Depot had its all-time high back in 21, like most things. And then it pulled back to a low, which again was that 50% level, the big broad 50% level. And then from the high, let's take this way. From the high down to these lows, the 50% resistance, 50%, was 342. And it did a spike on December the 13th. And so there's your really good example of a good 50% level spike. Good because you're definitely breaking the highs here. The past highs are here. You're even breaking this past high back in August. But the main thing is there's your 3-to-1 risk-reward ratio, and then there's your low. So you have a good risk-reward ratio to take that as a short and capture a good risk-reward. If the 3-to-1 was below the lows, I wouldn't want it. And because it's a 2-hour time frame, you had to wait instead of days or minutes. Gave you a little bit of grief, but remember what I said earlier? That's the work in trading, is to sit there and wait and be patient. Here's a good example of one where it's not really at, this is another good teaching example as this thing goes along. So from here to here, the reason I don't like this spike is because notice how it doesn't happen. Not only does it not happen at the 50%, it happens below the 50%. Not good. Not at a level, so we don't want it. And so eventually we do end up getting down to 3-1. Actually comes back down and retest it. In fact, as we get into May of this year, that's where I got the spike to go long. Let's finish out these screenshots that I put for you guys. All right, here's another 1 minute. This is another good example of a spike at a 50% level. I don't have the full 50% here, but my retracement level indicator is telling me that there's one right there, about 11,255, just barely hits it. takes a little while, and then goes down to retest that bottom. 1 minute, you get the idea. We had a really good teaching example earlier. So, all right. If you guys have questions about spikes, retracement levels, 50%, join the Discord, ask me the question, ping me, or just post it for other people to see. Other than that, thank you for your thanks, and thank you for joining me this Friday and spending this hour with me. I hope you guys have all learned something and found some good ideas. I'm going to keep looking for opportunities, and if you have opportunities, please share them in my community so that I can evaluate them and everyone can as well. Have a good weekend, everyone. Trade wisely. We'll see you next week.